The question I'm often asked is, should I actually buy a property with someone else? Because, I mean, it sounds like a good idea, right? It is a high value transaction and it can seem a little bit daunting to do it on your own. So we've got to have a look at our options. And the first one is, if I buy it with someone else, I can buy it as joint tenants, which the most obvious example is husband and wife. They buy a property, they have equal shares, and if one was to pass away, the rule of survivorship applies, where automatically that person's share goes to the surviving partner. So that's the number one. It's the most common. It's really the default position. Now the second option is what's called tenants in common. And this is more like a business relationship. So there's actually shares which can be equal, but they can also be unequal. So a business partner or a friend, for example, might want to buy a property 70% in one person's name and 30% in another person's name. And the easy way to do that is through tenants in common. And then there's actually a third option where you can actually get a combination of both. So think, for example, a husband and wife want to help younger brother get onto the property ladder. And they're going to have a 60% share in the property and the brother's going to have 40%. So that relationship is tenants in common, but the 60% between the husband and wife, that can be a joint tenant relationship where the rule of survivorship will apply in that scenario. So you can actually combine the both. So the question is, when would you do tenants in common? And the most obvious one is when there's tax considerations. So what if you've got a high income earner and they want to take advantage of the negative gearing? They may want to have a higher percentage in their name versus the lower income earner who won't get as many negative gearing benefits. Or they may have a short-term view where they're going to sell the property in a short period of time. So they might want to put a high ownership in the lower income earner's name for capital gains tax purposes, so they pay less when they sell. So you can see it can get a little bit complex, so you need to get your accountant's involvement in this. The other time you do tenants in common is essentially when you've got friends or relatives or business partners who want to buy a property with you, and you don't necessarily share that life agenda. You may want to have that more formalised agreement in place. Another case would be if you've got unequal contributions. What if I'm buying with you and you've got a $200,000 deposit and I've only got a $100,000 deposit? We could put 2/3 in your name, 1/3 in my name, so it better reflects the contribution that we're making to the property. Or another time would be if there's a bit of estate planning in place. What if I have children from a previous marriage and I want to make sure that they're looked after in my estate? So they're the common times when you go tenants in common. When would you go joint tenants? It's pretty obvious. It's when you're sharing your life agenda. And husband and wife, again, is the most common example. We're going down the same path, and that life agenda means that we can make decisions together with regards to joint tenants. So what are the pros of buying with someone else? First one is you can get into the market sooner, because if you're sharing your resources and you're splitting the costs and the deposit's less, maybe half, and the repayments you're only making half, that might be a really attractive proposition for some people. And also there's the perceived security that comes from going in with someone else. The other one is there's a bit of familiarity as well. I know this person, I'm comfortable with this person, and maybe the financial transaction is a bit scary, so that familiarity might be really appealing. What are the cons of, in particular, going tenants in common? It's joint and several liability, which essentially means that even though you own only a percentage of the property, when you go to the bank, they consider that you own the whole property in terms of servicing. And it can actually make buying the next property, in some cases, quite difficult. And the other con is the often forgotten one is we go into this relationship positively, but what happens if the relationship breaks down? What if you're best friends when you start and the property transaction makes you worst of enemies? Or you go into a business relationship, you don't share the same agenda, and you have different things that you want to achieve. How do you resolve those things? And that can happen when you have a relationship breakdown. So for me, the answer of should I buy with someone else, there's no one size fits all here. It just really depends on what you and your accountant come up with or what your life circumstances suggest that you should buy. But there is one thing I think you should do on every single time is to get an agreement in place and assume today that I need to get out of this relationship, and how would we do that? And for me, a little tip is assume that there has to be a minimum of 10 years for this relationship, because quite often Say two friends are going to buy a property and all of a sudden in 2 years' time they meet a significant other and then their life agenda changes. All of a sudden that's going to have an impact on you. Because ultimately you could sell their share, but probably a very limited market to buy it. So you're going to have to sell the whole property. So you could have agreement in place that says if we sell, either person decides to sell in under 10 years, we have the right to buy that person's share back from the original price they paid. So that you have these firm rules of engagement in place from the very beginning. But ultimately it can be a wonderful process and you can get terrific benefits from sharing property ownership. So it really just comes down to what's best for your circumstances.